GDX market vectors gold miner, unlike the XAU, the GDX has a big double top 3-day reversal all the way back down here to this neckline. MMTs at 55. And unlike looking at other gold related instruments, the GLD was the other one we have on the video there. And we have the XAU.X on another video there. Is they all have something very similar in common. We sold down here. Here's the weekly chart right here. Right here. And we sold down through the 50 week. The 10 week is tilting down. We broke below the 100 week here. And the 20 week to this major support level on a weekly. When we start getting down here, this is going to be where the last 2011 lows were, and that's about 51.53, and we had a nice rally up, a pullback to test that support level to make the higher high reversal, and that's how weekly trends work. You pull back a couple weeks and you make the weekly 5-week breakout. A lot of volatility at tops. How to gauge volatility at tops, how to be able to use sophisticated trade management. That's what the weekly looks like. On the other hand, when you look at the daily over here, this is it. You're at a major 2011 area of support and resistance, meaning that the support and the resistance both in here, okay, and the support bounces here, and the resistance and the new support levels here to highs. This is it right here. If we break below it, yeah, you got some little pockets down in here, but we'll use our own platform to figure that out. And if we break through, we're about to start a daily sell signal. Well, high alert for that reading. That's this blue bar right here. If it hits a daily sell signal, well, then it's more shortable down. And that's on the daily at major support levels. 3 straight down, we could come all the way down. We'll look at how to take the rest of that short. Over here on the GDX, you got $60 up and out of the money calls, $53 calls in the money, $53 puts that are below the current closing price of 56. We'd be looking at those. Why? Because we know that if we break down, we got the next low end right here is 51.96. So when we're looking at the potential failure, we'd be looking at that put. And vice versa, if we're going to come back up here to this neckline, that would be right up above 60 or right at 60 and a little higher right in here on any volatility up would be to look at the $60 put is here. We'd be looking to see if that loses premium and that the deflated $60 call would come into play up and out of the money. So you got up and out of the money trade and below the market trade. You got both and how to apply it. That's the daily and the weekly chart on the GDX. And we've done the XAU.X gold miners as well. We've done the GLD. And now gold had sold off significantly last week. About a 9% haircut total. 5% something down on this last couple of days of the week. So I already read that in other prior videos. Once again, how to be long, how to be short, knowing when to apply, and what ETFs and where they're looking for the weekly breakout like this. When we finally get to the market, is how we can buy and you can sell up here. And that it's a good holding, it's a good place to be at the right support levels between net weighted between the buyer and the seller. And they do take time on a weekly level. It's not like I'm buying it as a market maker trade intraday. I'm looking at where I'm going to be every 5 days in the trend and how each weekly bar closes, so I know how to stay the distance and sell at the top and short, and when it stops going down, and how this potential line could break. And if we do come down here, we would have a major test down here. But this line is the one for 2011 right here. That's where you rallied, plus you rallied, you held support, and you rallied to the high, and we're here.